Hey guys, how's it going? It's Andy from Go Investing. Happy Thursday. I kind of forgot what day it was. In today's video, I kind of wanted to try something slightly different. I've been watching a lot of sports YouTubers recently because we're in the NBA playoffs, we're in the Stanley Cup Finals, baseball season is ending, and football is just getting going. And so I watch a lot of these YouTubers, and a lot of the things that they do is they react to different articles about the sports that they're covering. And I thought that would be something kind of fun to try on this channel. I usually talk about stocks that I usually look at, but in today's video, I wanted to switch things up and talk about this article that I found from Motley Fool and kind of discuss what my thoughts and opinions were on it. I thought it was a really interesting article, and I'm very curious to see if you guys would like to see more videos of this type, or if you'd like me to continue what I've been doing and keep going on the my 3 favorite stocks in each sector. I can intend to completely finish that, but I wanted to try something new. Also, I'm in a different location. I had some comments requesting that I switch up my background, which is something that I've wanted to do for a long time, considering I have not lived in the house that backdrop was for, I don't know, 4 months at this point. And I spent a lot of time on Photoshop trying to create a nice backdrop. And then I just kind of looked around. I was like, I mean, this looks pretty nice. So I'm going to give it a shot. So let me know if you'd like to see more of these types of videos, and let me know what you think of the background at this point. So before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it. Hit the like and subscribe button, as would help my channel out a lot. With that out of the way, let's get started. And if you'd like to follow along, the link to this article will be in the top of the description. So this article is titled 3 Absurdly Overvalued Stocks to Avoid During a Market Crash. Now is the time to take profits on these 3 high-flying growth stocks in case of a stock market crash. So the whole basis of this article is saying that if the market does crash and you're owning these stocks, you should probably get out of them. And so I'm going to address these 3 stocks as if I owned them currently, or if I was looking to get into them, and kind of give my opinions on each of these 3 stocks. So as he says, as of September 19th, the tech-heavy NASDAQ is down 12% from all-time highs, signaling a market correction. So let's get started talking about the first stock on this list, which is going to be Snowflake, which is one of the most highly anticipated IPOs of 2020. When I think of previously hyped up IPOs, I think of Uber and Lyft, and this is the main one from 2020 that I feel like a lot of investors have had circled on their calendar for a long time. And it was really interesting because in their first day of trading, I believe the IPO price was supposed to be at like $125, and on the first day it doubled in price. And so there was a lot of hype behind this, and it seems pretty justified. When I'm doing a lot of research for this company, I thought it was really interesting that they've been doing kind of the data centers a little bit differently than stuff like Google, Amazon, and even Oracle. And so instead of having everything in just a warehouse, they have it out on the cloud, which makes it a lot easier to access. And as a result, people seem very excited about it. One of the really interesting things that I found from the Snowflake IPO is that Warren Buffett, who has been notoriously against buying into IPOs, which is something that I actually kind of follow that same sentiment, because when you IPO a stock, you really don't know the overall valuation of the stock. And for something like this where it's doubled in the first day, you get a lot of hype behind it. So let's see what he has to say about it. Most popular IPOs of the year, doubling from its IPO price of $120 in the first day. Cloud platform is used by 146 out of the 500 Fortune 500 companies. The problem comes when we take a look at how much one is willing to pay for the company's results right now. Right now, Snowflake has a market cap of $66 billion compared to its trailing 12-month revenue of $402 million and net loss of $342 million. In other words, the stock is trading for as much as 127 times price to sales despite posting no profit. Meanwhile, cloud technology giants such as Oracle and Microsoft are trading for between 5 and 11 times sales. The situation is no different for emerging cloud service companies like Docusign and Workday. Those 2 companies are trading for 31 and 12 times price to sales. Investors should be aware of excessive speculation growth going into Snowflake stock and look for just about any other company in the sector as a better buy. So when I think of Snowflake right now, I think its business model is very exciting. I think it's doing something different than a lot of these other tech giants, and I usually kind of am a little wary when I go and invest in a company that's going against these giants like a Microsoft, Oracle, Amazon. But they seem to be doing something a little bit differently. When I did the research, it seems like they have a market share of around 10%, which is pretty good. I think it's like 5th overall. And there's no one company that's dominating this space at this point yet. So right now they're doing a lot of good things, but going forward, the long-term growth of the company is a little bit scary in my opinion. I think the company's only been around since like 2012, and tech stocks are notorious for having rapid growth at the beginning. And when you have a company like this that gets hyped up on its first day, doubles in price, and it has a net loss of $342 million, I'm kind of on board with him and saying that this is probably not a great opportunity right now. I think one of the things that really went with Snowflake doing well is that the market is being so speculative at this point. And so when you have a company like this that IPOs, people get excited and it pushes it up. So with this current price, if I was in it right now from the IPO price, I think you're going to be down around, let's take a look. You'd be down 10% at this point from the IPO. If I got in on the IPO price, I'd probably hold. At this point, I'd be waiting to see what happens with the overall market. I personally think that the market's going to fall. And if I could get this stock maybe closer to the actual IPO price, I'd be much happier. I also really don't like buying IPO stocks because you really don't know the trend, the price movement of the stock, which is something that I kind of base most of my trades around. So I'm on board with him saying that Snowflake is maybe a company to avoid at this point. Number 2 is going to be Tesla. He says Tesla has become one of the year's hottest stocks after the electric car manufacturer finally delivered profits. With the stock trading for 19 times price to sales and 305 times price to earnings, investors are essentially betting that there's a 100% chance Tesla's new production facilities in Germany and the US will align with customer demand. Given the valuation, this sounds like a huge risk to take. Investors have a lot to lose and little to gain if they buy Tesla after its spectacular rally this year. Shares are now down more than 10% from their highs in August. I've been notoriously cautious about Tesla so far in 2020. This was a stock that I bought back at like $200 back before its stock split. So that'd be like $40 based off the current price. And when you look at the charts, it's pretty interesting because the stock pushed up to like $500 before the stock split or right after the stock split, and it has fallen a considerable amount since then. And looking at the charts, if I was going to be looking to buy, which I'm actually more willing to buy now than I would be like a month ago based off of these stock kind of falling in price, I'm looking for a very nice support at the $330 mark. So right now, if I was owning the stock, I would feel all right now. Every major move down has been bought back. And so there's a lot of momentum on its side. I think they have a fantastic product. They have a lot of people that care greatly about the product and the stock. It's one of the most overhyped stocks, but it seems to be able to hold its own. For most of 2020, I've been saying that I'd be expecting a major pullback. That hasn't happened yet. So at this point, if I was owning Tesla, I might be considering locking in profits, but I kind of see a buying opportunity in the future. If it falls from the current price of $395 down to $330, I'm considering buying in. But until that happens, I'm going to be watching what happens. It's currently at 4% on the day. Yeah, I don't hate Tesla at this point. But yeah, I see the justification for why it might be something to sell at this point. And then the last stock on this list is going to be Moderna, ticker symbol MRNA, which is, if you've ever taken a biochem class or just maybe even a biology class, the ticker symbol for mRNA, pretty funny for messenger RNA. Basically, the idea behind the company is that they're one of the leaders in the vaccine trials. The stock is up 245% in 2020, so that is a huge push up. And most of that has been on the potential of a vaccine. And let's see what he has to say about that, but it is up a lot so far. It says they're one of the front runners. Due to government agencies' research and development funding, the company now has over $3 billion in cash and investments on its balance sheet. The company will supply 100 million doses of their mRNA, 1,273, enough for 50 million people, to the US government for about 1.5 billion. The company can produce between 500 and 1 billion doses next year. They're talking about the competitors of Pfizer and AstraZeneca already have combined manufacturing capacity to produce 3 billion doses of their coronavirus vaccine candidates next year. The world only needs 15.6 billion doses for global immunity. If successful, the vaccine could produce billions of dollars in revenue for the company with a market cap of around $27.5 billion, but it's likely to be a one-time cash flow. Hence, biotech investors should look for less risky players in the sector if they want to bet on a coronavirus vaccine success. I am 100% in agreement with this author. At this point, if you didn't get in at the beginning with these biotech stocks the success of them has been completely based off of speculation and hope. Since there's so many players that are trying to work for a vaccine right now, the whole sector is up a lot. And it's one of those things where you're feels like it's a lottery at this point, where you have a very small chance of picking the right company that's going to find the vaccine. And if you find it, sure, you're going to succeed, but numbers are not on your side. And at this point, the stock is up so much based off of the potential of finding a vaccine that if they're not the ones to find it, the stock is probably going to crash. And so I think biotech has been one of those sectors that I'd like to stay away from just because it's based off of a lot of hype, and one bad news story can pretty much kill all of your potential trades. And so if something comes out where a different company is the one that finds a vaccine, I'm assuming mRNA stock is going to crash and give back a lot of those gains. So I don't see a lot of upside potential. I would not be buying at this price. If I owned it, I might sell my shares, maybe half my position, because there is a potential that they find it, but there's also probably a significantly higher chance that they don't find it. So if I wanted to take a riskier play, sure, this could be an option, but if I'm not in it already, I'm not going to be buying into it right now. So these are 3 stocks. I think it's a very interesting list because it's not only just tech stocks, you do have the biotech stock in there. And these are all stocks that are up significantly so far in 2020. You have Snowflake, which was the most anticipated IPO of 2020. You have Tesla, which has been probably the top performer of the major stocks. And then you have Moderna, which is a biotech stock that has done very well from the speculation of a potential vaccine. So let me know what you thought about these 3 stocks, and let me know what you thought about this type of video, and let me know what you thought about this backdrop. You get to see my fish and where I spend most of my time editing these videos. So thanks for watching this video. I appreciate all support, and I will see you on Saturday most likely.